What is up, Blake? How we doing today?
What's up, Alex? We're doing good. Trade market's been on fire this morning, so I
It is.
can't really complain.
Yeah, it has been a crazy, crazy, crazy day, man.
It's some data came out and
What was that? The flash manufacturing PMI?
yeah, there was PMI and then there was existing home sales too, which actually came in a little higher than expected.
Okay. What's up, Jack?
So
PMI, has that got anything to do with PPI, CPI?
that's
Yeah, it's the manufacturing index. So prices, I guess manufacturers. I don't. I think it's prices manufacturers pay for
Man,
equipment.
I'm so glad I don't pay attention to any of that.
Yeah.
It's almost too much. If you look at an economic calendar, it's like there's news coming out every day, man. I ain't got time for all that reading.
Well,
that's right.
that's what I say. I mean, before the internet, I don't every Fed event, every FOMC meeting is like a NFL game. We've gamified the whole financial markets with these events, and that's just I don't know. I don't know what people did before the internet. I guess they just unless you
They,
didn't know
You
you were
called
it's
in.
not me, Jack.
they called it in. I can
Yep.
remember Alan Greenspan, and he'd walk across the street to make some announcement, and the media would be all over. Was his briefcase in his right hand or was it in his left hand?
Right. It's
Well,
like the purple eye.
things were just as stupid before the internet,
Yeah.
but it's become magnified now.
That's right.
I
It
got a
has.
do you read this PPI and CPI and all this?
I don't. I don't follow the manufacturing stuff. I always see it on my news alerts, but I don't dig into it because I don't know, man. I'll focus on the big
Good
ones,
reason
maybe
why
CPI,
for the
PC.
folks at home. Good reason why you don't need to pay attention to that is because the economy is not the stock market, right?
Yeah.
Don't even bother wasting your time. I even knew a guy that even would read the beige book. Talk about boring data. And I think they make it all up anyway. I don't think the government could get it right exactly. A CPI that should be investigated by the FBI.
I agree.
Maybe some of some of the Federal Reserve may be getting investigated by the FBI. Lisa Cook is being investigated for mortgage fraud. We'll see how that turns out.
Holy cow.
Fed's Jerome's being investigated for I don't know if he's being investigated, but Trump has alluded that he's embezzling money or something. So but yeah, pretty crazy day. Actually, let me pull up my SPY chart here. So first off, folks, if you saw the yesterday, last night, news broke, Cracker Barrel logo change. Jack, what do you think about this Cracker Barrel logo change? Better or worse than the old
Yeah.
one?
Neither one of them. You know, I knew, oddly enough, I knew a guy that was an heir to all this Cracker Barrel stuff.
Oh yeah,
It's
nice.
a cash machine, man. It is a cash machine. I don't know if you've ever been in one. I was in
Oh
one.
yeah,
They have a gift shop in front of the restaurant, or next to the
yeah.
restaurant. And it's a real thing. People love it. But this logo looks like something a second grader made up.
I know, man. So like yesterday, I said I saw this after market hours, texted my Telegram, said we might be hunting for some puts. We did get a put, folks. If you did take that Cracker Barrel put, we're up 27%. Let's look
Tell
at the
me
chart.
about that. Tell me about that. What'd you do? You buy it or you sell it? What'd you do?
I bought it. I just sold the news, man. Because like so I was on X and like I was looking at this and all these people were throwing out, basically this this woke executive CEO changed the Cracker Barrel logo. And I was like, you know what? This has become a political thing. I bet people are going to signal their anger or dismay with this. And I was just like, let's I got a cheap one. It was like 40 cents on the contract. And I was just like, let's go for it. It had already been pushing on the volume and open interest at open. And it was already like up like 40%. So I was like, well, this sounds like a good one. We'll just like press the gas pedal on this one and it worked out. So
Let's take a look at a 6 month chart on Cracker Barrel.
yeah, yeah.
I'll tell you one thing. That guy's got to be an idiot, a woke CEO to take a billion, one of the most recognized brand logos in the world,
I
and
know.
for what? Because he didn't like the old man in the rocking chair with his elbow.
Yeah,
Well, I don't get it. What's with these guys?
I thought all this was illegal under Trump, but I guess not. All this woke stuff.
Right there.
But yeah, this isn't the 6 month chart. This is the long term chart. I mean, this thing has been selling off hard. I mean, just 6 months. Uh, it's been kind of been flat for the 6 months, I suppose. But
Yeah.
you want to look at the daily? You want to look at the daily over 6 months?
I can tell. This
Yeah,
is money compared to what else is out there.
it's just been chop city all day, and now it's below. Honestly, I kind of want to get out of this because I was. This was just like a fun play. I was like, oh, let's sell the news. Let's go into it. Um, it is below the what is this, the 200? Sorry, I have so many moving averages. Sometimes I forget which one. Yeah, 200. It might continue. It might have some more downside. Pretty good volume too on this sell here. So we
You know,
might.
once it gets below your EMAs there, you're like, 204 would be about the longest. But at 200, once it gets below that, you see, there's no more support. At
Yeah.
any, I don't care what anybody says. There isn't any support. When those EMAs are on the top of the stock, they're serving as points of resistance, right? This is about to go lower and face really a hard resistance. So you're going to keep the short on?
Oh man, 27% in like an hour is pretty
Take
good.
it.
I
Take it.
don't. Yeah, I think I'm gonna take it. I'm gonna send out my Telegram just to take the gain real quick. But
And tell them this. Say, take the profit and tell them, never forget the best part about trading is taking a profit.
all right, here we go. Ready? Let's see.
Hey,
Let's let's let's
put it out there, Bubby. Let
let's
them,
let's write this out.
let
I'm gonna
them
say Jack saying take
take
profit
profits. Go enjoy your day.
on Cracker Barrel.
Never forget the best part about trading is taking a profit.
The best part about trading is taking
And
profit.
go enjoy your day. That's always you gotta get outside.
JC.
Coyote got the Walmart put.
Man, I can't type, dude. I always make typos in Telegram, dude.
Yeah,
I'm not gonna edit that. Yeah. So everybody take prop. I'm gonna go ahead and close this position out myself. Let's see if we can get.
that's nice, man. Good work there, Alex.
Thanks. It's
What the
fun,
people
man.
tune in for.
Sometimes it's not hard. Sometimes trading is just you go with the flows, go with what. Okay, I got out at 65 cents, everyone. So if you're on that, oh shit. But yeah. Hey, is Kane coming today, Blake? Oh, there he is. What's up, Kane? Yeah, so all right, well, that's a good little start. I did so everybody I did so there was also a CNBC article. Um no, I don't know Giodi. Who was that Walmart? I didn't do that Walmart put. I wasn't talking about that, but I don't know who recommended that one, Giodi, or did you find that yourself? We also got some sell-off in First Solar, all the solar companies today, because Trump said they're not going. What did Trump say? Let me go to my CNBC. He said U.S. will not approve solar or wind power projects. So First Solar, folks, I know I said I was hunting for puts. I got into one. I didn't have time to send it out to people. I did get I think I got what did I get? A 40, 20, 25? It was either 20 or 40% gain on that. So I didn't send it out in time. Sorry, guys. But if you were looking for puts on those tickers I sent out a list of them. They're pretty much all down today. Array, run. Yeah, they're all looking not too hot after that. That's going to be real bad for all these solar projects depend on government subsidies, wind power. I don't know what companies do wind power. I don't follow that as much, but at least the solar companies. If you did take any puts on those tickers today, this morning, you're doing pretty good right now. So sorry to get that out to you in time. I got it. It like popped 40%. I was typing it out and I was like, I don't have to, I can't give you like a good entry. And I didn't know if it would recover. So, but yeah. Rosalita, well, you could say that it's just a profit panel, like taking profit, making profits in the markets. You could say that we're market profits. Whichever one you want to think of us. Both, maybe.
That's
Um,
pretty funny.
yeah. So what are you seeing here on the on the gamma side, Kane, today? Because man, we are wow. Look at that. I mean, this is a crazy candlestick. This could go either way. I feel like from a on a what is this, a star? I don't know what I forget what this is called.
Doji.
Doji. I mean, right now we could go either way. We could pop up off of this 20 EMA from here tomorrow, or we could break down hard. And if we break down hard
Tell me
tomorrow,
what's a doji?
it's this little cute and cuddly candlestick right here.
No, I mean the folks at home, because I
Yeah.
really
Oh,
being funny. I don't know what a doji is.
yeah.
Doji is what they call a candle where the open and the close are basically right on top of each other.
Mhm.
So you can have a doji that has a very far away high or a very far away low, or both a far away high and a low, or
Like
it can be very
equidistant.
close to the open and close. All that matters is that open and that close distance is very small, which
So
is
the
basically what we have.
little hash on the left, that's the open, and the little hash on the right's the close, and the top and the bottom is the high and the low.
Yeah,
That,
yeah,
Yeah.
there you go.
wow.
It's
So what do you think when a stock closes right where it opened?
indecision. Indecision. Like that's it's a tricky position. Yeah, CTSY is saying it right.
How much volume that day? That would be a really telltale sign if it opened and closed close to the same and it had large volume. That would tell you.
Yeah.
I don't know what the volume is today, actually, comparatively. I don't. Where's put my volume at?
Is a doji common?
No. Well,
Not super common. Yeah. I mean, obviously, you'll get more of them if you're in a choppy sideways period. It shows up a lot more often, right? Or at a turnaround point. Yeah.
I mean, we had one up here on the 13th, which, you know, that we opened pretty low the next. I don't know. I mean, it depends, right? I don't know what's Gamma showing. You think we're gonna go gap lower tomorrow? I mean, we have the Jackson Hole meeting.
Yeah, with Jackson Hole, it's hard to even trust any level for that you're getting from anywhere.
Yeah.
Let's maybe tell the folks what is gamma and what a gamma pocket.
Yeah, so gamma is basically it's a way there's a couple ways to explain it. The one that is relevant to us is that gamma helps the market maker measure their risk at any given level inside the market. So if they have a high risk at a certain price point, they need to hedge themselves. So using gamma levels, we can predict what the market maker is going to do. They're either going to buy a bunch of underlying or sell a bunch of underlying in order to cover their risk exposure. So gamma levels can be very helpful and very good. And I made the comment that with Jackson Hole, then even a gamma level may not be that helpful because it's these types of things are good when the market maker can accurately predict what's going to happen next. So they have an accurate representation of their risk, which is the gamma level, and then they have an accurate representation of what they can expect going forward. So of course they will react to a market, but if that market gaps or runs, then the market maker is not in a great position either. So they'll have to chase that as well, and that would completely shift and change the gamma picture. So when you have these large known events, it's harder to get a clear picture from gamma. Oftentimes gamma is still right. For example, on earnings plays, oftentimes that the gamma is still right. The price still runs exactly to a gamma level, but it is a lot less certain than if you didn't have that event.
Is it what? So what are the what are the levels today?
Today for 0 DTE, today on SPY, we're looking at, it looks like chop between 635 and 637. They have both have similar exposures, but opposite. So negative to downside down to 635 and positive to 637.
Yeah.
That's a reasonably tight range given
About
where
where
we've traded so far today.
But what was interesting yesterday, the expected move is like 9 points on spot.
Yeah.
It was
Yeah,
weird.
that's big. Yeah, hard to make money yesterday.
Well, today it was well when I set up my trade, my spot, I was looking at today's like expected move, like 9. What was it? 9 points yesterday between yesterday and today. I don't know. But that is like right. It's kind of where we've been trading. I mean, right now we're right at that lower level of gamma. 635, you said? Yeah. So,
Yeah.
man. So, yeah. I don't know. We'll see where we go. Looks like we're basically right back where we started today. I mean, like this. So I did take an MES trade. I got stopped out like crazy. I just like hung it up because I was just like, we got this supply, we got this demand zone. Then I was looking for a big run off of this, but we got stopped out here. It just wasn't, I don't know. I tried to trade in this early range, probably a mistake. I should have waited for a better trade to consolidate this morning. But like this was all just, I mean, I should have known with these big candlesticks on the 1 minute. Like it was pretty wild. Even on the 5 minute, it was wild.
Yeah, what we have is directionless volatility, right? And that's what makes it
Yeah.
tough.
Yeah.
Oh, that's the hardest market to trade.
Yeah.
It is. I got eaten up doing, trying to make short-term trades in a sideways, choppy, high volume market.
Yeah.
Yeah. I mean, yesterday you had some solid, I mean, you had some more solid directional moves. You had a little bit of chop here, but then it's kind of set up towards the end of the day for some direction. I don't know. Maybe I'll get into a trade later this afternoon, like during, power hour 132, see if we can get some more direction at the tail end of the day. But yeah, right now it's like, it's always the trades like, oh, I could have gotten, I was just like done. I was like, I'm not. It was a tough morning. So I'm gonna be I'm gonna make sure I have a high confidence, set up with like a good R before I do another trade today on anything. But I don't know. One thing I've been looking at these robotic stocks. I don't know. Do you do any so all these? There's a couple of cool robotic stocks. Let me go to this one's. So MBOT, Microbot Medical, actually holding up pretty well, folks. This is $3, 340, 343. Held up well yesterday, holding up well today. This is a pretty good trade. I think I'm gonna buy like 100. And I think that you can actually sell, Jack, you like this, you can sell covered calls on it too. I think it has pretty good premium.
Yeah, I don't like stuff under 25.
Right. I'm trying to get in on the robotics revolution.
Does this thing have any revenue?
It does actually. I don't know what happened. I need to dive into the earnings. I don't know what happened on the 12th on their latest earnings. But they have, oh no, they don't have any earnings. SYM, okay, here you go. SYM's not holding up as well. Symbotic is another robotic stock. They actually do have this company does have pretty good earnings, 529 million. So this company does robotic deliveries to Walmart warehouses, right? So Walmart, this company was actually spun off of, it was like Walmart's, research lab. created another company out of it. They do have basically their sole customer is Walmart. But they do have a lot of good robotics, like for delivering warehouse inventory around the different warehouses, like in the warehouse, not between warehouses, but in the warehouses themselves. So look, not really gonna. This is on the watch list for robotics. I want it to. It's selling off right now. Not really want to. I want to find an area of support, but I do think that just Walmart alone, this is one of the robotics companies that does have good revenue. 500, half a billion. It's growing 549. Last quarter, this quarter, 592. So it's growing at a pretty good clip. So that's just one company I'm looking at. On the robotics front, want to get a more support line, support zone at least before we do enter that. But longer term, it's not bad, and it also has good options chains, I believe, if we're looking at it. Got some good weeklies, got pretty good premium. You could sell if you do want to take it, and you could sell covered calls. But we'll keep an eye on this just to watch it. But yeah, Jack, we'll check in on some of your favorite. Look at AVGO. AVGO finally breaking trend, Jack. What do you think about this?
Well, I sold on Tuesday. I sold the 285 and I bought the 280, 250, and I made like 28 cents. That's 11.2% for 3 days. But this time, this is much closer than what I normally do, right? I'm normally so far out of the money, I could be in a coma the whole week and nothing's going to happen. But here, it's getting a little close.
Getting a little dicey. You gonna roll it? You just gonna you roll them or you just close them out?
So what I do is I put this on Tuesday, and if something's messed up on it, the only time I'm going to make a move is on Friday, maybe 15 minutes before the close.
Oh, okay.
Every time I put on a credit spread like this, you have three choices on how to get out if you want to get out. And first choice is do nothing if you think the options are going to be out of the money at expiration. That's kind of where I'm leaning right now. Second choice is to just buy to close the short option and sell to close the long option, and you're out.
Mm-hmm.
And then your third choice, which you can use rarely, is if this whole thing really breaks down on Friday and it drops below both strikes, then I'll probably buy to close the 285 and stay long the 280, 250. I'll take a loss when I buy to close the 285. But if the stock continues to drop below 285 and lower, that 280, 250 put is going to skyrocket in value. So that's why I like the credit spread. You got limited risk, the difference between strikes. You buy that lower strike price put, that lowers your capital required to do the trade. And the third reason you buy that lower strike is you have a built-in hedge.
Yeah.
That rarely comes into play. I'd say once a year, maybe we get a bad trade where the whole thing breaks down and you could stay long the long option and make money. And oddly enough, we had a client that made 13 grand on a trade that broke down where when he went into the trade, he only had a net credit of $1,000. Not only, but that's a big net credit, $1,000. But the trade breaks, he covers the short, stays long the long put, stock continues to drop, he makes 13 grand. So that's what this strategy is. Even when it goes bad, it can be good.
Yeah. I
Yeah.
like that a lot. We got a couple questions in the chat. So real fast Zoom user, the explanation of gamma exposure, not just gamma. Gamma exposure shows you where the market maker has
You want to show your
a lot
screen
of risk.
on this?
Oh, sure.
And just like show what it looks like. It is pretty cool. You can see how the price does sort of well, it vacillates right between these gamma exposure levels.
Yeah. So let's see. I'm trying to figure out which screen is the correct
the
one.
struggle's real, bro.
Okay. Yeah. So here we go. So this is gamma exposure in SPY. We see a big spike here at 637. So, and then a negative spike 635. Right now, you can see that it is increasing right here, to the positive side. That means the market maker has more risk over here at 637 than anywhere else, and that risk is to the positive side. So as the market moves up towards 637, the market maker stands to lose more and more money if they do nothing. So rather than do nothing and accept that loss, that market maker is going to hedge themselves as the price moves up towards 637. In this case, it means buying shares of SPY, and that if they end up buying a significant volume of SPY, then that's naturally going to start driving the price towards that 637. So it's almost like a self-fulfilling prophecy. But you do need that initial push towards 637 that gets the market maker like, oh, I'm a little off sides here, and they start hedging themselves. So over here, what we're seeing is the overall risk that the market maker has at every single price. And the one that they're going to be most sensitive to is the one where they stand to lose the most money. In this case right now, it's 637. But what if we go down instead of up? Well, then they're going to be sensitive to that 635. So hopefully, yeah.
And for gamma exposure, there's to the upside, it's not as the moves to the upside, gamma tends to stabilize price to the upside, but it can accelerate price sell-offs on the downside, right?
Yeah, so that's overall net exposure. So if we add all of these bars together, I don't know if I have a good visualization. I'm trying to bring up the new software that we're looking to launch. Okay, over here. Let's see. Okay, so this is our new software that's coming out sometime in the next few weeks or a month. Depends on how fast.
Not to interrupt you, but don't forget old Jack when this thing rolls out. This is how.
All right, yeah. I will definitely let you know. So what we've got here is, and we can split out by expiration. Okay, and so what we see here is August 21st. That's today. This is the positive gamma and the negative gamma. So we're actually in slightly negative gamma territory if we look only at today. If we look across if we look across all expirations, we are at negative gamma. So what Alex was telling us about was that when you're in negative gamma, what happens is that the market maker's hedging activity kind of worsens the situation. So if we're going down, the market maker's hedging activity is accelerating it, even if we've already hit that level or gone beyond it. But when we are in a positive gamma territory, what'll happen is if we hit this 637 right here, this is not on a 0 DT. Let me bring my sheet back because I'm a little bit more familiar with it. I'm still getting used to my own software. So over here, if we hit 637 and we were in positive gamma territory, then what would happen is as we go above 637, the market maker is going to start selling. And then so that brings us back towards 637. So in positive gamma territory, what you'll see is that these levels, they tend to be sticky or you bounce right off of them. And if we're in negative gamma territory, then what happens is we accelerate towards that level and often blow right through it and just keep on going because the market maker is still covering themselves beyond that strike, especially if you have exposure like this, where once we hit 637, that 638 will start to come into play and probably start growing, then 639, 640. And so that can really start shooting a market directionally.
And you said that it's basically for SPY today, that's at 635?
635 to downside 637. Overall net gamma exposure is negative. So so we can expect if we break these levels, then we'll probably run. That's what it's saying.
Mm-hmm. So
Rather
635, folks, if we do break there, which kind of getting far away at this point. But you know,
Yeah,
looks like we might stay above that today
yeah,
at this point, but who knows?
yeah. There's also another question in there, I think, was it Dave? So
Yeah,
Jack,
rolling.
he's asking, well, do you even roll?
Nah, I don't.
Yeah, rolling is doubling down on your broken thesis. I tend to
Yeah,
think doubling down on your broken thesis. So you're putting more money to hope that the stock recovers
yeah, I
later.
don't throw good money after bad. I
Yeah.
don't see the advantage of rolling. I really don't. A lot of times when you roll, you're rolling out at the same strike, just more time, and that's a really bad move. That's a terrible move. You know, if you were to roll out of a covered call, for example, you'd want to pick a little further out expiration and a higher strike, right? Same thing with this, but it's all or none for me. Every Tuesday I go in, I'm willing to take the risk and I expect to win. You know, we're over 95% win rate with that, but I never roll. I don't see the reason why to roll. I want out of that trade. I'm out. I'm rolling isn't going to help me. People roll and think, well, if I roll it out, then I'm giving myself time for the stock to drop back down and make me right. But it doesn't work like that. I'm not a fan of rolling.
I'm the
Yeah.
exact same way. As like, if you're wrong, just admit you're wrong.
Yeah.
And so, it's a little bit different. Like Jack talked about sort of like fixing or repairing a trade. That's a little bit different. He's like, because in his example, he's like, I have a put. I've also sold a put. Let me buy back that put the price really breaks downwards. And then so now I'm just long a put. So that is acknowledging that I was wrong and that we're actually going directionally in one direction. And so now I'm going to take advantage of that new direction. That's completely different than rolling, where you're like, oh my God, I'm wrong. I'm losing money. Let me give it another week, another month to see if it goes back in my favor. It's just not being able to handle that loss.
Yeah, and then if you're wrong again, you've stacked loser on top of a loser. You stacked more money on top of a loser. So now you're real down bad. And the cool thing about spreads is that you know what you're going to lose, right? Your max loss with your position. So you should be okay with that max loss, you know, if it goes against you. Like don't if you're trying to roll because you're desperately trying to make back some money, you set up that trade out of the bounds of what your account size is comfortable with.
And at
So
that point, your reward risk is way off, right? Because you're trying to save that trade. You're probably going to end up, even if you ended up saving that trade, then you're probably only going to end up with a very small profit, whereas you're risking a much larger loss at that point.
And
yeah.
wasting time
Right.
with
Absolutely, yeah.
Yeah, you're thinking, you're like, oh, okay, yeah, just you have to keep it on. You're focused on that trade instead of a better trade. Yeah, just move on. I mean, your thesis is disproven. Your thesis is disproven. Um, yes. So yeah, I mean, we took a credit spread on Apple in Lazy Traders Club this week. It's probably going to close that out for 100%. Because what can you tell me what the gamma exposure is for Apple, Kane? Do you have it? You can do it by ticker, right?
Yeah, yeah, I can do that. Give me 1 second.
Because we sold the 235, bought the 237 call, so we were bearish on Apple this week. And it's been just rolling off here. We're
How
at
far out are you looking?
just Friday.
Oh, okay, all right.
Yeah, I don't. I'm just curious. I'm just curious, but I don't. I think we're just gonna hold. I think we're just gonna let this expire because I don't foresee Apple breaching 235. I mean, unless there is like some crazy Jackson Hole turnaround.
You know what's funny about Jackson Hole? There's a lot of guys that have nothing to do with it that show up out there just to see if they can get some tip in a bar or a restaurant. You know, all these big wannabe players are up there right now. Hedge fund guys, traders.
No.
I know a guy that used to go up there every year, act like he was part of the crowd, stuff like this. It's hilarious. Absolutely. It's
Did
the
he get-
billionaire's vacation spot, right?
It's beautiful up there, man. I've skied up there, hiked up there.
It is pricey, very pricey.
Yeah. Yeah, there's actually another ski resort on the other side of the mountain. It's actually in Idaho. It's the same mountain, but they have better runs actually in Jackson Hole. Um, we went up there skiing. It's nice.
Great fishing too.
What'd you say?
Great fishing up there.
Oh yeah, I bet, man. It's so. I saw a grizzly and her mama grizzly and her cub. We were hiking. We were like 7 miles in the wilderness. Me and my wife and this mama grizzly. We turned a corner. This mama grizzly, maybe 75 yards away, was coming down this rocky scramble, and then behind her was her cub, and that's like what you don't want to see when you're alone in the wilderness.
You get
Uh,
between the mom and the cub, it's over for you.
I know. I
Yeah,
know, and you don't know if there's another. You don't know how close the Cubs are. So we saw one.
absolutely right. First, I saw a cub out here yesterday. Beautiful cub, brown, had a blonde streak down his back. And I went around a bush fishing. I see him standing right there. The first thing I do is look all around, see, where's the mom or if there's another cub and mom's behind that. I don't want to be anywhere near it.
No. Do you carry bear spray or a horn?
Most of these bears out here, they know that if they mess with me, I'm going to turn them into a rug, fireplace, and drink wine on top of with my wife. So they don't mess with me.
Nice. You've established dominance.
I have. They run when they see Jack.
That is awesome.
Alex, to answer your earlier question about Apple, major gamma exposure is at 225 to 222.5, so just below where we are right now in the market for tomorrow.
Yeah. Okay. Cool.
Yeah.
Wait. So it's not. It's not.
I want to hear
it's not
more
above
about the
current-
Bears.
It's not above the current price.
What was that? Say that again?
There's no real gamma above like 225.
Not, I mean, 222.5 is by far the largest gamma. So there is some gamma above it, but I mean, it's completely overshadowed by that 222 and a half.
So that's probably on a normal event week would just kind of mean the price is going to stay right, where it is basically.
Right. Yeah. Yeah.
Cool. Yeah, we might just hold this until expiration. Get a nice 100% premium. So let's look. Yeah, man, this is what a crazy day, man. This is I'm looking at the real-time charts. So again, I just want to show you folks here. If you're in my Telegram, this works on SPY. You can do it on whatever ticker, even individual tickers. But look, so these are supply and demand zones. Again, you can see how this is kind of playing out today. Again, unfortunately, I was a little too anxious today to get a trade on with some of this chop in the morning. Got stopped out. So, but if I had held on today, there have been a lot of good setups coming off of these supply and demand zones. So, what are supply and demand zones, right? It's an auction. Like trading is an auction. It's a marketplace to bid between buyers and sellers. So this is the demand zone, right? When more people want to buy at this price, when this is demand, right? And then when there's an oversupply of people who, there's an oversupply of people at this price vis-a-vis sellers who are willing or buyers who are willing to buy at this price. That's what turns into a supply zone. So there's more supply, the price goes down. There's more demand, the price goes up. And you can see this now that we've kind of established the intraday trading range. Look at this. Look at what's happening here. Get rid of this one. This was probably my mistake this morning as I established another supply zone too early. If you get rid of that, though, you can kind of see it in a lot of clarity. So we had the demand zone. We did breach it briefly, but these were pretty big candles. And this is on the 1 minute chart. So look at these candlesticks on the 1 minute chart. The demand, right? It bounced off the demand. There was buyers, right, who were really wanted to buy at this point. We went up to the supply zone, and then we reversed. Now, look at this. Went back up to the supply zone, reversed again, and then where do we come back to? The demand zone, right? Jumped again. Where did we go back to? The supply zone. Now we're falling off. So when you're trading SPY, when you're trading whatever, and you can establish this, you're doing intraday trades and you're day trading, you want to establish these supply and demand zones. This is a really useful way to think about supply and demand, right? It's an auction. And so when it breaks one of these, when it breaks down, when it's bouncing off here, this would have been a good point to go short. And then you can also set your stops for wherever, but you can use these to establish a risk to reward, right? So if you think, if you're going to play a bounce off of this supply zone, you say, for instance, on SPY it'd be different. On if you think about it on the futures, you can do like the actual like points. But if you're just playing SPY, you can say, okay, I know I'm looking at futures, but let's just say I was looking at SPY. You just look. I think if it bounces here, I'm gonna run this trade through to the VWAP, right? So what is that? What would that be? Say that's a $4 run, but the supply, your supply zone up here, you're going to stop out if it goes against you at $1. So that's a 1 to 4 risk to reward trade that you can put on. So these help you figure out when to enter, but also how to set up your trades for maximum success of profit. So if it's 1 to 2, 1 to 4, or whatever.
I personally love the supply and demand zones, but Jack, do you have the behind the scenes explanation of why those exist?
No, other than market maker would want to be in that range. Anything outside of that range represents extreme risk.
Right, and this is where basically the big money will move in these zones. So this is where the big money, like you're like little fish trying to just pick up the pieces. But these big supply and demand zones are where the big players come in.
Yeah, I think in recent times, those zones have gotten even stronger than they have in the past. And my explanation for it is algorithms, right? So the market makers definitely their risk is within those areas, but algorithms are looking for these areas of psychology where people like to react. And so you'll get a lot of volume in these areas. So if you put up like a volume profile, you would see that it would pick up around those areas.
Let's go.
Yeah. So, it's hard to see like this, but basically what happens is that prices are not sticking in those zones, right? If they were sticking in those zones, then you would see a lot more in the volume profile, but they're just visiting those zones and going out. And so that's why you see the majority of that volume in between the supply and demand zone. So if we get stickiness inside those supply and demand, then you'll see that volume profile spike up in those areas. And then if it breaks that zone, so if we break to the downside below that green region or to upside above the red region, then that is what we call like a momentum move, right? That because we spent a lot of time there and then we broke an important level on that volume profile, then that would most likely run and move. But what you'll see is, I guess volume profile doesn't really capture it too well if we just bounce off of those zones. But what you'll see is
there a better way to look at it? I mean,
a better way to look at it, yeah, if you look at the actual, just the volume at the bottom. So you see where it bounced off of that the green zone at around 11:15 a.m. You'll see that the volumes start to spike up a little bit. The reds get a little bigger near that region, and then the green also gets bigger near that region. So when you get near those zones, you see little spikes up in the volume.
Mm-hmm. And then you can see when it's bouncing down, it's not as big as this initial move, but it is bigger than the relative volume of the bars previous to it.
Well, the initial move that you pointed to was the bounce off of the lower zone, the demand zone.
Yeah. Yeah, and so and the idea behind this is if you're trading, right, and I think a lot of traders, it's a mindset shift more than anything. So if you're looking at this trend line and you're a trader, say you want to go long on what we're looking at here. A lot of traders would look at this and they'd be like, now is the time to go long. Look at this trend forming, which is true. There is a trend forming. That trend started down here. So you already have 63.87 to 64.08. You basically had a 20-point swing in the price. So is it really the best time to enter when the price has already moved 20, 20 bucks? Probably not, right? Because that's a lot of that move has already been happening. It's the same to the downside as well, right? So you might think, oh man, go over here. SPY's breaking down. Like we could get lower. We could be going lower. No, why would you want to enter after this move has already happened? You see these extreme moves, these have already happened. This trade is already come and gone. But if you use these supply and demand zones, you can see that, okay, yeah, now we got up to the supply zone, we're bouncing off. All right. And you can use, you can also, you use like the level 2 and the depth of market and stuff as well to see when the buyers come in or the sellers come in or overpower. But then if you use these, you get those bounces. You have some pretty nice entry points. It helps establish those. So yeah, we're trying to create a platform for this to trade SPY. Trying to figure out how to do it though, because it kind of is done in real time. Probably be price action bouncing over a certain period within like a certain range to establish these. Trying to figure out the coding logic for it. That'd probably work, right, Kane? I know you code a little bit.
Yeah, yeah, you could see areas of price resistance, but if you can get level 3 or 4 data, then you'd basically see it exactly where all the orders are. Yeah.
Oh, okay.
Yeah, so level 2 shows you where the highest and lowest orders are, but level 3 shows you basically all the orders. And then level 4 is a visualization of all the orders.
Dope. Okay, level 3. I'm gonna look at that. I think I can get that with the API is. So yeah. So anyways, that's intraday. But look, it is what we're looking at, the market's volatile, right? There is ways to establish you can do day trading, whatever, it's fun. But sometimes it's nice to be able to just target some nice income, even despite all these volatility, which I know you like to do, Jack, with those spreads and your income counter helps people do that. Whether the markets are going this way, that way, whatever way. So how does that work? You want to give us a little sneak preview?
I'll tell you, the income calendar is the craziest thing I've ever seen in my life. So, we got a lot of bright young guys at this company like Alex and Kane. And about a year ago, Steven and a couple of guys, I thought they were playing a joke on me. I was about to come out to here. I think it was last year. I was leaving Florida, coming to Colorado for 5 or 6 months. And Steven calls me up. He says, "Hey, Jack, what would you do if if uh, if you had a data pool that showed you stocks that went up every year on the exact same date for 10 years in a row? What would you do?" I said, "Well, the first thing I would do is tell you to stop BSing me, because something like that cannot exist, right? If it did, you got to show it to me." So they showed it to me, and I'm hard to impress, but I was blown away. I'm not sure how they got all this, but they did have it. And once they had it, they said again, "What would you do?" And I said, "I would not buy the stock. I got a better way to skin the cat. If I know that stock is going to go up every year on the exact same date, that's going to open a window for me to place a trade." It's the craziest data pool I've ever seen. Probably the most high conviction data pool. I mean, if you got a stock that goes up every year on the exact same date, that's strong 10 years in a row. That's a high conviction strategy right there. And if you like high conviction and you like nice weekly income, the income calendar is something you want to use. It's child's play, simple.
And if I know Jack, he's got a nice strong trend behind it as well. So he's stacking the odds.
It's all about stacking those odds, man.
All about stacking it and packing it.
That's right. So I want to learn more, man. I want to know the exact date that I can get some income from stocks every single.
Well, I'll tell you what, I'll give you 13 of them.
All right, 13.
13, that's a lot. Nice.
I'll give you 10 stocks with the exact dates. And just to put a little icing on the cake, I'll give you 3 that, you know how there's stocks that go up on the same date. There's also stocks that go down. I'm going to give you 3 to avoid, 10 to jump on. I'm going to have you packed with value and ready to make the kind of money you deserve. So without further ado, Blake, should we show them the secret?
Let's see this.